Order filled.
Good morning, everyone. Today is Friday, November 8th, 2024, and we're going up with QQQ. H pattern, moving average bounce, H pattern, H pattern, H pattern, H pattern, moving average bounce, slingshot.
Horizontal line triggered on symbol QQQ.
And there's a $1 move, ladies and gentlemen. We're going to lock in half of our gains, and we're going to see how this price reacts to this level. We haven't had a true retrace yet, and that little spike up to $1 I think is a fake jump. I expect some kind of retrace roughly around the 513.50-ish. We'll throw up a fib here in just a bit. As long as it stays within that 1/3, 1/4 area, we'll continue to stay with it. We want to see some speed and violence getting away from these 21 moving averages on all three of our charts. We're not seeing that, so it might be enough to take $1, maybe stretch a little bit more, but without speed and violence, this price is not going to revisit the high of the day. If the price can get past the 513.75, 514 area, we might come up to that high of the day. If we can't launch with power here soon, we'll probably just grab our profits and run. But here soon, we should see power if there's going to be power in this move. And again, we need to get it past the 75 area, go up to the 514, and then kind of act like a whale coming out of its water, taking a deep breath before it plunges back down. So again, this is what we're looking for. We're back on the 21 moving averages on all of our charts. We should expect to see power here soon. If not, we will basically take our money and run. As you can see, the price is struggling trying to jump past the 513.75, getting up to the 514. So we're going to pull our profits right.
Order filled.
And there's a $1 move today, ladies and gentlemen. As always, never forget, be a pro.
Order filled.
Good morning, everyone. Today is Friday, November 8th, 2024, and we're going back up with QQQ. H pattern, wide state with the price, H pattern. H pattern, moving average bounce, H pattern, close enough slingshot. 555 H pattern, area of support, oscillator agreement. If the price explode with speed and violence and get past the 513.50, 513.75 area, I expect the price to come back up to this level and test it. Again, we need to see speed and violence with that price to get past the 513.50, 513.75 area. All right, so we impulsed up. We're coming off a corrective wave. Let's turn this down. Oh, come on now. Let's copy it. If this price accelerates through the 250 moving average, we should expect to see that trajectory. Now, if we get caught up around here and we have to come back down and form an H pattern on the 21 moving average, we might not get that full move. Again, we're going to play this bar by bar, but depending on the next couple minutes, if this price launches and continues to go up, that's the projected target we're looking for. If this doesn't get past this area and we have to come down and retest again off of the 21, the power won't be there, and we might get our full dollar, maybe a little bit beyond that, and then, we'll have to move on to another setup. Right about now, if you got in, you have an H pattern close enough moving average bounce for a continuation trade. Let me turn the transparency down. Right here. Oh, right there and right here. All right, so if you wanted to, you could have entered. This is a continuation setup, and we had a second retrace early on before we even achieved that full dollar again. So what I see here is, even if you were to get into that setup, you might be able to pull 50 cents, maybe 75 cents, because you're already late to the party, and it's losing. Here's another, right here. You can hit the buy market button, get in, maybe take it up for a 50-cent move, if not slightly beyond. The way it's looking, in my opinion, and we're going to play this bar by bar, is we might get a little bit past the 513.50, and that might be the failure weight. We don't have enough speed and violence to carry this price on and continue. So the interest to me is lessening minute by minute. So because there's less interest means that there might not be enough participation to really move the market up to that 513.75, 514 level again. So again, we're looking to take profits here roughly around the dollar mark, maybe a little bit beyond, and call it a day. If someone was to take that continuation setup, hopefully they're aware that this is a dying up move. So if they were to get in,
horizontal line triggered on symbol QQQ.
There's your dollar. We're going to lock in half of our gains, and let me finish my statement before I forget. If they're looking to get in on that retrace that we just mentioned, on that H pattern move and average balance, they should only be shooting for about a 50 to 75 cent move on this. All right, if we can't get past the 513.63, we're going to actually, you know what, forget it. We're going to punch out right now.
Order filled.
And there you are, ladies and gentlemen. A little over $2 on 2 trades today. I have something written down. I want to read it to you. Get your frame of mind right when you're thinking about becoming a professional trader.
Verily, the stock market is a volatile vortex of variance and velocity, a venue where the vicious and valiant vie for victory. One must be vigilant and versatile, ready to embrace the ebbs and flows of financial fortitude. For this arena is not for the vacillating or the vulnerable. The market, with its vicissitudes and visceral swings, demands a vision sharpened by vigilance and a mind steeled against both vanity and vexation. Those who enter must do so not as victims but as victors in waiting, prepared for the veritable storms that will test their mettle. In this venue of violence and volatility, wisdom is the weapon that outlasts all. The successful trader holds a view unclouded by vengeance or vehemence. Rather, they value the clarity of calculated choices and view losses as mere variables in the larger victory. With each venture, they seek value, applying velocity where vigor demands it and patience where prudence calls. They understand that while the market may veer wildly, true valor lies in holding one's vision and not veering off course when tempests rage. To thrive, one must embody a victorious mindset, a virtuous balance of veracity and verve. The trader who stands victorious is not one who fears volatility but one who sees it as fuel, an essential force in the alchemy of the market. Such a trader ventures forth with voracious resolve, undaunted by the trials of variance, vigilant in their discipline, and verily prepared to emerge, in time, as conqueror of the very forces that sought to unseat them.